join the meeting. So we'll start in 9:05.
بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. أرحب بالجميع في هذه الجلسة الحوارية لعرض أداء الشركة خلال الستة الأشهر الأولى من هذا العام 2024. أولاً أعرف بنفسي سيد بن سعيد الحمحمي، الرئيس التنفيذي لشركة أبراج لخدمات الطاقة. نشكر لكم اهتمامكم ومشاركتكم لنا في هذه الجلسة الحوارية، ونحن مستعدون لتوضيح أي تساؤل لديكم وملتزمين بمبدأ الشفافية ومشاركتكم مستثمرين الأعزاء سير أعمال الشركة. طبعا لا ننسى دور بورصة مسقط ودعمها لتسهيل التواصل بين الشركاء والمستثمرين، ومن ضمنها مساعدتنا في إنجاح هذه الجلسة الحوارية. هذه الجلسة تتكون من جزئين رئيسيين. الجزء الأول عبارة عن استعراض أداء الشركة التشغيلي والمالي في الستة الأشهر الأولى من هذا العام، والذي سيلقيه المدير التنفيذي ونائب المدير المالي للشركة. ومن ثم الجزء الثاني سيكون عبارة عن فقرة مفتوحة للإجابة عن أسئلتكم واستفساراتكم، سيقوم الفريق التنفيذي الحاضر اليوم بالإجابة عليها، وبعد قليل سأقوم بالتعريف بفريق الإدارة التنفيذية الحاضر في هذه الجلسة للتفاعل معكم والإجابة عن استفساراتكم. العرض سيكون باللغة الإنجليزية لوجود مستثمرين أجانب من داخل وخارج السلطنة، ولكن فريق الإدارة التنفيذية الحاضر في هذه الجلسة كما ترون أغلبه فريق عماني ومستعد للإجابة عن أي سؤال أو توضيح أي نقطة باللغة العربية. سيفتح المجال لأخذ الأسئلة في آخر الجلسة، الرجاء الانتظار لآخر الجلسة لعرض أو طرح أسئلتكم خلال هذه الجلسة. الجلسة ستكون مسجلة وسوف تتاح لاحقا في موقع الشركة وفي موقع بورصة مسقط. السلام عليكم. Good morning everyone. It's a pleasure to meet with you today in this investor engagement session to present the company performance in the first 6 months of this year 2024. My name is Saif Al-Hamhami, the Chief Executive Officer of Abraj Energy Services, and today I have the executive management team available to present the company performance and answer your queries, and shortly I will introduce the management team available in this session today.
The presentation will be in English as we have foreign investors joining us from both inside and outside Oman. However, we are more than happy to take any question or make any clarification in Arabic if needed. I would like to welcome and thank all participants in this engagement. I would like to also thank MSX for their continuous support and for enabling us to have this session with our investors. Please note that this session will be recorded. We have prepared a set of slides that reflect the overall company business and its performance for the first half of 2024. The structure of the session will be in two parts. The first part will be the presentation on the company operational and financial performance that will be presented by the CEO and the Deputy CFO. The second part will be an open Q&A session at the end. So we appreciate if you can keep your questions to the end of the slides. We anticipate about 30 to 40 minutes for the presentation, and we will leave the remaining time for the questions and answer session. Can go to the disclaimer. So before we start, we would like to make the following disclaimer. So this is for you to note in this session. The session will be recorded and it will be posted, as we mentioned, both in MSX and Abraj websites, so you can access them later and refer to them at a later stage. The content has not been approved or reviewed by any regulatory or supervisory authority. We don't intend to make any forward-looking or forecast statements. The session should be taken in the spirit of engaging and updating the investors on the overall company business dimensions and its performance in the first half of 2024. Next slide. So first, an introduction about the management team who will be presenting and also answering your questions in this session. As I have introduced myself, Saif Al-Hamhami, the CEO of Abraj. I will be presenting the first part of the company performance. Next to me is the Deputy CFO, Mr. Sadiq Al-Lawati, who will be presenting the financial performance for the company in the last 6 months. Today, we also have the executive management team present with us. We have Mr. Lakshmi Rajan, our CFO, Zahran Al-Kindi, our Chief Operating Officer, Mr. Salah Al-Hathi, our Director Business Development, and Mr. Hilal Siyabi, our Chief People and Culture. And as you can see, the company is led by an experienced and diversified experienced leaders who can take and deliver the expectations of the investors and the key stakeholders of the company. The next slide. So we will first give an overview about the company performance first on the market dimensions, the HSC performance, the market intelligence, and the order book. We will reflect on the operational performance and also on the human capital side, the in-country value, and at the end we will be presenting the financials in more detail. And at the end we will leave a room for the questions and answer session. So first, we would like to give you an overview about the company and the market dimensions and the position of the company. As you might be aware, Abraj continues to be the leading drilling company in Oman, and it's one of the top energy services companies in the country. Abraj has the highest market share in the drilling rigs at 27%. Abraj as a company was founded in 2006 as Oman's flagship in the oil and gas and energy services, specializing mainly in the drilling, workover, and the well services. We have around 10 service lines that are revenue generating, which fall under two broader categories. We call them the drilling and the workover, and the well services product line. The main lines that fall under those broader categories include drilling, workover, cementing services, hydraulic fracturing, coiled tubing services, flowback, integrated project management, chemicals management, etc. So our drilling and workover fleet, which is currently the main product line, constitutes of 26 drilling rigs and 5 workover units, and it's considered one of the youngest fleets in the region, delivering high-quality services and performance to our various clients. So this is including the addition of 1 new rig in the first half in the Kuwait operations that started in March, and it excludes the 27th rig that started in July as the second rig in Kuwait. Our rig utilization sits high at 97%, including, and this also includes the stacking of 3 rigs that occurred in the first half of 2024, and that's a natural completion of contracts from 2 clients. Meanwhile, we managed to add 2 new rigs in Kuwait operations specifically. We are advancing and having advanced discussions with various clients to redeploy the 3 stacked rigs in the coming rigs. Currently, we have over 8 active clients. That includes the international clients outside Oman. In terms of employment, we have over 2,700 employees, and we stay committed to the Omanization targets of over 90% Omanization. In terms of operational excellence, the company continues to make improvements in its operational excellence. One of the metrics is the non-productive time, the MPT, or we can call it the breakdown time, which is we try to minimize it. The industry threshold is above 2%. And as you can see that Abraj have been consistently driving that lower and lower, which means more uptime and more satisfaction from our clients. We also managed to break a few records with various clients when it comes to well delivery and also the time that we deliver these wells. Next slide, please. So we will talk about the company HSE performance, the health, safety, and environment. The company has made great advancement and have been performing very well when it comes to the HSE, thanks to the people capability, engagement, applying best global industry practices, and taking care of our people and complying to all the regulations. We have operated over 949 days without any lost time injury, and over 272 days without any injury to any of our staff across all the operations, all the product lines, and all the clients that we operate with. This is a really a big showcase that we are proud of, and we continue to deliver high quality services and take care of our people in this harsh environment. As you might be aware, the oil and gas industry is filled with risks and operating in harsh environments, and achieving such excellent track record is quite a commendable achievement. Next slide, please. So here we will talk about the order book of the company. So the company continues to maintain a healthy contract backlog. We continue to maintain it somewhere between 500 to 600 million Omani riyal. Our current order backlog sits at around 587, and we have showed there in green the high confidence opportunities. These are opportunities in the final stages to be signed with various clients, including extensions or new contract awards. So we expect to continue maintaining this level of backlog, and we expect to close the year at around similar levels, between 500 to 600 million Omani riyal backlog. Furthermore, as I mentioned earlier, we are advancing discussions with the various clients to redeploy the currently stacked rigs, which are 3 at the moment, with the various clients, and we expect to redeploy them within the coming months. Next slide, please. So in terms of operational performance, first we will talk about the drilling and the workover product line. The team here continues their excellent performance, driving excellence. And the first chart towards the left, you can see the step change that the team managed to achieve in reducing the non-productive time across all our units and bringing it well below 1%. And worth mentioning that the industry global benchmark sits at 2%, so Abraj is well below that, putting it in the top quartile. In terms of utilization, we continue to maintain it at a high utilization, currently at 97%, and that's due to the stacking of two rigs, mainly in the first half, coming late, but we continue to maintain it at a high level. In terms of well delivery, and that is one of the metrics that the clients look at from or expect from the service companies like Abraj, we continue to enhance and improve that. As you can see, there is a continuous trend of improvement, and that is, due to the basically excellence of the people, the technologies that we deploy in our units, the maintenance, and the following the best practices. And towards the end, what we are showing is, as a responsible company, we actively seek continuous feedback from our various clients on our performance so that we can improve. And as you can see, there is a trend of continuous improvements in the customer satisfaction, and that is something we continue to monitor to ensure that we deliver high quality services. Next slide, please. Similarly, in the well services segment, the team continues to push for operational excellence, which is reflected in the first chart, as you can see, in the improvement in the MPT that we managed to lower it this year. In terms of utilization of the units of the well services, it's comparable to what we've been doing last year, slightly lower, and that is due to the lower utilization of one of our hydraulic fracturing units, and that is due to scheduling. But we expect this to pick up in the second half and close the year with similar level of utilization of the well services for the entire year of 2024. Next slide, please. On the human capital side, the main takeaways from this slide is the commitment of the company towards the localization, humanization. We continue to maintain a high humanization level, currently sitting above 92%, across all type of jobs, from junior level until senior management level, and also covering the technical roles in the company as well. On the corporate social responsibility, the company continues its commitment, and it has a robust, well-governed process on how to receive requests and how to review them and how to dispense the budget. Worth mentioning that our budget for 2024 is around 150,000 Omani Riyal, and we have consumed around 40% of that year to date on various categories. As you can see here, we have the categories of the charity, the health, the safety, environment, education, and so forth. And we will continue to do that in the second half to ensure that the company operates responsibly in the societies that we operate in. Additionally, as you can see on the right, the company has, as you might be aware, a training institute to serve its internal demands. As you know, that the industry is evolving, it is highly technical, and there are changes in it, and having the internal capability of training and building competence is key to our success. So we have a strong institute that delivers to our staff mainly, but also we deliver to clients outside specialized technical training, also practical hands-on training, as well as HSC and leadership courses. We also collaborate closely with the Ministry of Labor and OPAL, the Omani Petroleum Association, to train and prepare highly skilled Omani talents in the electrical and mechanical and other technical specialities for the oilfield service industry in Oman in general, and to support also other companies. Furthermore, the company is also committed to provide short-term training and internship opportunities for Omani students from various universities and institutes, with 53 trainees in 23 and 16 year-to-date in 2024. However, that number is expected to ramp up, very quickly, as we have just signed, some agreements with different clients and ministries, including the I'dad and Mu'tamid programs with different clients and the ministries. So we will continue that as a focus for us as a responsible company, that we train and prepare students to be ready for the industry and to give these internships and training going forward. So this is the last slide before I hand over to my colleague Sadiq. As part of our commitment in the in-country value, we stay committed to supporting in-country value and supporting SMEs, where we have set high targets to allocate a good portion of our expenditure and our contracts to be awarded to local SMEs. And we keep pushing these targets year on year to ensure that the company continues supporting and evolving the industry around it. With that, as you can see, year to date, we have spent on the SME over 7.6 million Omani Riyal. And on the ICB spent, we exceeded over 34 million Omani Riyal. And we will continue that trend in the second half to ensure that we develop the industry locally. But on the long term, that also reflects positively in the company, that we get more suppliers and we have more competitive pricing for our services. With that, I will hand over to my colleague Sadiq Al-Lawati to take you through the financial performance in more detail.
Hi, good morning, everyone. So I'll be taking you through our financials for H1 2024, and we'll be comparing it with our financial results in H1 2023. As you see, that revenue growth is 8.3 million from H1 2023 to H1 2024. That's almost 12% growth. The main drivers for the revenue growth in H1 compared to H1 2023, it's coming from the rig moves as well as the commissioned rigs in Kuwait. However, we had some repair and maintenance in H1 2023 that is driving our lower revenue in 2023. With regarding to the quarter-on-quarter, the decline in revenue in Q2 2024 compared to Q1 2024 is mainly due to the stacking of 2 rigs and lower frac jobs in Q2 24. The EBITDA improved due to the increase in revenue by almost 5.3 million. Quarter-on-quarter, there is a slight decline in the EBITDA, is mainly driven by the drop in revenue. The PAT year-on-year in H1 compared to H1 2023 compared to H1 2024, we have seen an increase of 4.2 million. That's mainly driven by the increase in revenue and the efficiency driven in the operations. Quarter-on-quarter, there is a slight decline again. That's mainly driven by the drop in revenue due to the stack rig as well as the lower frac jobs in Q2 2024. With regard to the cash flow bridge between H1 2024 and H1 2023, Our operating activities in H1 24 were higher compared to H1 2023, mainly driven by positive change in working capital. That's driven by the increase in revenue, which resulted in increase in additional profit after tax. Investment activities in H1 2024, we have higher investment in PPE, and also on the other hand, we have in cash some fixed deposit in 2023 H1. With regarding to the financial activities, we have taken a temporary short-term loan, basically to fund our Kuwait 2 rigs that we have commissioned in March and in July. So with that, basically we have regularized it by getting a long-term loan in July. So that investment has been, financial activity been streamlined basically. And due to that, basically, we can see the slight drop in our closing balance from 4.6 million in 2023 versus 4.2 in 2024. Right. In CapEx, we can see an increase of spending in CapEx by 26.9 million. And again, that's mainly driven by our new operations in Kuwait. We have launched or commissioned basically 2 rigs. And that's basically the CapEx related to these rigs. Compared to also the net debt times EBITDA, we can see a great improvement, and that's mainly resulted from the increase of revenue, which has driven the improvement in EBITDA between H1 2023 versus H1 2024. Again, diving down furthermore with the segmental. Again, our drilling and workover remains the domain and revenue. We can see there's an almost increase of 8.8 million in revenue. That represents almost 14%. And that's mainly driven by the increase in revenue coming from other income as well as rig moves and Kuwait rigs, operating Kuwait rigs. However, again, as mentioned earlier, we had one-time incident or occurrence in H1 2023 related to the Cat 4 maintenance, which shrinked our revenue in H1 2023. Quarter on quarter, we can see that there is an increase of almost a slight increase by 0.4%. Again, that's mainly driven despite the fact basically we have these stack rigs, but because of our increase in revenue from rig moves, that maintained our revenue levels the same. Well services, we can see a slight decline in revenue from H1 24 versus H1 23. That's mainly driven by a drop in frac jobs, lower activities in frac jobs. That's the same case with the quarter on quarter. There is a slight decline also in revenue revenue related to the lower frac activities. With regarding to the EBITDA, we can see for the drilling and workover, it is improved again in line with the increase of revenue. Same thing, unfortunately, it's not the case with the quarter on quarter. We can see a slight decline on EBITDA. That's mainly driven because of the stack rigs and lower revenue due to the stack rigs. With regard to well services, we can see that we have a slight drop in the EBITDA year on year from H1 2024 to H1 2023. Again, that's mainly driven with the lower revenue coming from lower frac jobs. Thank you, and I'll give stage back to you.
So we have one last slide, which is talking about the outlook and trying to give you a bit of a sense of how the market will be looking and what Abraj will be focusing on. So as you might be aware, there is a positive outlook in general for Oman credit rating, and as has been confirmed by various credit agencies worldwide, which will reflect, inshallah, positively in all sectors, including the oil and gas sector. And with that, we will continue our work with our main clients in Oman to maintain our market lead in the services we provide. We are also active in growing the well services and also looking at other avenues and we will disclose them basically whenever it's ready in terms of new product lines. In terms of the region, Abraj, as you might be aware, managed to expand regionally. We managed to successfully commission 2 rigs out of the 3 contracted rigs with our client in Kuwait, both ahead of schedule and safely. One was commissioned in March, and the second was commissioned recently in July last month. And there is ongoing discussions with the client for the 3rd rig call-out. Abraj is also continuing to explore opportunities for expansion in the region for the drilling rigs and the well services segment in key regional markets that include Kuwait, Saudi Arabia, and Algeria. And we will keep you informed of any advancements that we make or any commitments that we secure with any of the clients that we currently talk to. With that, we will conclude our first part, which is the presentation, and we will open the floor for your questions that will be taken by the management team. Thank you.
Hello.
Hello, we can hear you.
Hi, good morning. This is Bishan Bhalla from Vision Capital. Thank you for this call. Thank you for the presentation. Good set of numbers. Just a few queries. If I look at your OPEX or your G&A expenses for this quarter, you mentioned the rationale for the same, that there were higher manpower costs and rig costs. Now, do we see corresponding revenue increase in the subsequent quarters because of deployment of the 2nd rig in July? Just wanted to check on that.
So it will be a combination of both. So what we have, in a nutshell, we are maintaining a similar, a high utilization of our units. However, we have just stacked 3 rigs in Oman operation that will be coming out of basically operation, that we will not see the revenue coming out of those rigs in the second half. On the other side, we started the operation of 2 rigs in Kuwait that will somehow balance it. So we will look at the numbers as it comes in the coming months, but we expect them to sort of, balance each other. But that is yet to come once we do all the basically the cleanup in the coming months.
If I may just, if you can just elaborate, 3 rigs have started operations in Oman, and you will not see the revenue in second half of 24. Did I hear that correctly?
No, you mean the revenue from Kuwait, yeah?
No, you mentioned something about Oman as well, 3 rigs.
Yes.
Okay.
Yeah, so they stopped operation. We will not see that.
You stopped operation. Sorry. Okay, heard that. Okay, sorry, I didn't hear that correctly. Got it. Understood. One of the questions everyone sort of keeps asking, and I'm sure it's particular to your industry, is these day rates. So if you could just give us some sense of where day rates stand over the last couple of years, how do you see them evolving? What are the key driving factors? That'd be quite helpful.
I'll give it to the specialist, our BD director, Mr. Salah, maybe to give you some insights.
Okay, the day rates constitute of all our OPEX, including the fuel, the cost of maintaining the assets, the manpower, where the manpower will always, in particular in Oman, the manpower will attribute to the highest OPEX expenditure and various costs. Then what we see from the day rates, and specifically because of Oman regulation when it comes to manpower, the Omanization, the rotation in the field, and so on and so forth, which may not be which is not similar to what you will see in Kuwait. So based on that, the cost of the day rates in Oman is different from other parts of the GCC or even in the region. It all depends on the cost of living, cost of and the type of regulation, so on and so forth. So what we are seeing right now in terms of day rate in Oman, it is increasing year on year. We have not seen it reducing. The cost of inflation as well taking a big part of it. But the day rates are increasing year on year. And in addition to that, to the manpower, it is also attributed to the cost of new assets that always been demanded in the country. These new assets normally, or mainly, they will be highly automated, highly mechanized. So it has all the bells and whistles that of the latest in the industry. So therefore, it will also increase the day rates. So the day rates in general will be increasing year on year in Oman.
Now, if I may ask on these day rates, our fundamental understanding of day rates was effectively sort of a margin expansion. So, for the same kind of work that you do, if the day rates go up, barring some incremental sort of cost offsetting, it should ideally add to bottom line. Is that theoretically right? Or even if day rates increase, your net profit and margins might remain where they are?
Even if the day rate increase the margin, yes. What we strive for is that we try to maintain always our margins, margin levels, and to expand on those. Now, as I said, if you look at a new asset today versus an asset a few years back, cost of asset has increased there, and if you maintain the same kind of a crew level of experience, their cost also increases because of the inflation. Therefore, the day rate will increase, and you try to maintain the same kind of margins. Now, the other aspect, we may strive for a higher margin if we're looking at highly advanced assets and rigs and so on and so forth. So there is a competitive edge. Therefore, we will factor that. If there's a technology advancement or gap in the industry that Abraj has, then that also be factored to improve our margin.
Okay, all right, noted. Next query would be, with regards to sort of your outlook on dividends. I understand, that's a shareholder decision, and you had mentioned that you would pay a 60% incremental or 85-90% of net profits. So how do you sort of see that evolving? Because like we saw in the second quarter, we saw a slightly higher OPEX, but going forward in H2, you expect the rigs that have gone on operation to be offset by the revenue from Kuwait. So how do you see sort of your full year profitability numbers or sort of margins for second half of 24?
So in terms of dividend, we are committed to what we have disclosed before. And I think that commitment stays, as you correctly highlighted. It's a 6% growth on what we have basically paid as dividend in the previous year, or 85% of the profit of the part of this year, whichever is higher. So that we are committed to that. In terms of financial performance, so it's natural in this business that rigs, they come out of contract. There is a temporary idle time in between, and then you negotiate again, and then you redeploy them. So it's just that these three rigs are coming at the same time that we commissioned the 2 Kuwait rigs. So we expect them to some extent to balance each other. Of course, the financials of each rig is different, but we will see that in the second half. So in general, we expect some kind of a stable performance. But then also in terms of utilization, it is normal in this industry, as I mentioned, that rigs come out of contract, temporary idle time, redeploy them. We've seen this cycle 2 years back, 3 years back, and we come back and we just fluctuate somewhere between 95 to 100%, as you can see in the rigs utilization. So the outlook for us, we see it positive and stable. And also, we are not even factoring the other incremental or growth opportunities that we are working on as well, both in Oman and outside Oman. However, we can only disclose those when they are firmed at the time that we firm them later on.
Perfect. Last couple of queries before I leave it to my peers. The 3 rigs that have gone out of operations due to end of contract, what specifications were those? Were they high spec or low spec? If you could just specify that.
I can tell you the details
of those 2 rigs. So 3 rigs. So two of them, they were coming out of our client, Petroleum Development Oman. And the specs, one of them is 1,000 horsepower rig. It's you can say, relatively light-duty drilling rig. And then the other one is 2,000 horsepower rig, which is a relatively higher or medium duty rig. The other or the third rig was coming out of our client Total Energies, who have basically completed their exploration campaign, the first phase, and they're taking a pause, and that's why we're starting the rig. And that is a medium or heavy duty rig, 2,000 horsepower.
Okay, and last question from my side, the sort of projects you're working on regionally in Kuwait, in Saudi and in Algeria, you're looking at sort of low spec rigs, or is there a sort of endeavor to look at high spec rigs as well?
So we're looking at everything that we are serving at the moment. So Abraj has a wide serving in terms of its rigs. So we have the low end, the low horsepower from 500 horsepower until 3,000 horsepower. And basically that is the range we are looking at. And with the various clients, depending on their demand. So we will firm the scope once basically we get to that advanced state. But what's on offer today is the entire offering of the Abraj rigs range.
All right, that's it from my side. Thank you so much and wish you all the best.
Thank you. Thank you. Anyone else? Any?
Any question? Okay. I see one raising their hand. Can you please go ahead?
Hello.
Mr. Yes.
Good morning.
Hello. Yeah.
Thank you for your presentation. I just have a question regarding, do you have any additional capex or maintenance which is planned during the upcoming quarters, or especially for Kuwait and Saudi Arabia operations?
Yeah. Okay. Good morning. As of now, there is no major maintenance similar to the one what we carried out last year. That would be coming up next year and the year after that. So nothing is planned in this year.
Okay, thank you.
Yeah, the Kuwait 2 rigs, one rig has got commissioned first rig was commissioned in March, as Mr. Saif has said. Second rig got commissioned in July. So the capitalization of that will happen in Q3. The third rig is we are awaiting for the mobilization notice from the client. So as of now, only the second rig capitalization has to come in Q3. Other than that, would be the routine operating capex for the existing rigs. That is an ongoing process.
Okay, understood.
Thank you.
Hello.
Yes.
Yeah, I see no further hands raised. You mentioned that you carried out the CAT maintenance last year. You don't foresee any major maintenance this year, but you also mentioned that there might be some major maintenance coming up in FY25 and FY26. Is that correct?
Yes, yes.
Could you give us could you confirm the amount of major maintenance that was spent in 2023? And if there's some guidance or some insights as to what this major maintenance amount might be in FY25 and 26?
So basically, as we mentioned, that we have a relatively young fleet, yeah? And so Abraj started in 2006, 2007. Today we have in our fleet the 25 rigs, the 5 workover units, and the 2 new additions in Kuwait. So we have a relatively young fleet. These rigs, they can go for more than 30 or 40 years in operation if you maintain them and you follow the industry standards. And part of the industry standards, there is the major CAT for maintenance program that you have to execute roughly every 10 years of operation. So basically, as our rigs, they came throughout the years from 2006, 2007. We've made additions throughout the years, and if you've looked at our prospectus, it's been a continuous growth of around 11-12% CAGR year on year since inception in the last 18 or 19 years or so. So we've been adding rigs throughout. So throughout that cycle, these rigs that complete 10 years of operation, they will be due CAT for major maintenance, basically, so that they can continue the operation. So what we had last year is a surge of up to 4 or 5 rigs coming at once in 1 year. So we've taken many learnings out of that in terms of scheduling, that we will need to phase them on a longer period so that we see less financial impact. Also, in terms of the efficiency of how to do these major maintenances, and also taking some measures to do some of these maintenance steps offline so that we reduce the time. So in the coming 2 to 3 years, we will be seeing some of these CAT 4 coming, but they will be phased and planned in a different manner so that we take all the learnings from the previous years and we ensure we do them in a more less disturbing manner, so that we phase them out, and also more efficient so that we take less time and basically we incur less losses during these. So we expect maybe a few in the coming years, but they should be in a lower frequency than what we have incurred in 2023.
Good. All right. Thank you. But what was the amount in 23, if I may just note for my purposes?
Well, it could be in the, I'm only looking at the maintenance cost. Yeah, in 23, it would be somewhere around per rig maintenance cost to down. We did about 5 to 6 rigs we did. Yeah.
Yeah. Sorry, how much is it per rig?
Yeah.
I couldn't hear you clearly.
5 to 6 rigs we did.
Last year in 23.
In 23.
Okay, but you're not mentioning the amount. All right. Okay.
So the major cost is not really the maintenance cost itself.
It's really the days that it goes out of operation. It's the time it goes out of operation and we lose the revenue.
Understood.
Yeah? Because the days it's out, it's zero.
Right. I know the only reason I'm asking is to get some sense of what sort of this loss of revenue could be in the future years compared with what we saw last year. But I understand, I respect that. Next question is, you mentioned that 3 rigs have gone out of operation due to completion of contract. What is the idle time expected on these rigs, so such that the utilization will go back to 100%, or let's say higher than 97?
Indeed. So basically, we actually submitted tenders. We participated in tenders for those 3 rigs.
We are actively talking and in the final stages, I would say, with various clients. So it will be phased. You're talking about months, within the 6 to 9 months to come. We expect to redeploy some of these rigs. However, that is pending the final agreements with the various clients. So the assurance I can give you is that we are in advanced stages, and it's not only one client. We're talking to at least 3 or 4 clients for different options for these rigs. And we are talking about months, hopefully between 6 to 9 months. We will start redeploying some of these assets back to the operation.
Okay, all the best. And last query is, between, let's say, over the next 18 to 24 months, how many more rigs will go out of contract?
Between 24 and
18 to 24 months.
Over the next 1 to 2 years. Yeah. Over the next 1 to 2 years, how many rigs will go out of contract, just to get some sense of what utilization could be?
So, as Mr. Saif has alluded, that if you look at the backlog that we had presented, the opportunities that we are almost closing in, those attributes to more than half of our fleet. And therefore, we are looking at in the next 18 to 24 months, we're just looking at a possibility of only rigs that will be risk of out of contract will be just a few handful, two to four rigs. That's it. Because the majority of the discussions and negotiation and so on and so forth has taken place now, and we are just waiting for the final outcome. So therefore, that will secure majority of our rigs for a longer period of time.
So if I may add, basically the contract cycles are around 5 years. Some of them are 3 years. Some of them go up to 7 years. So this is like a cyclic process. And as Mr. Salah mentioned, we are in negotiations to keep on extending. And so we might get into this situation where we have this small idle time. But in addition to this, maintaining the same utilization and the same scope, we are actively looking at growth opportunities as well that could come and basically supplement the current scope and continue the basically the growth aspiration of the company.
Understood. And finally, in terms of technology, because the sector that we analyze, but you guys are the experts in terms of technology. How have you seen things evolve over the last decade, where the process has become more efficient, or sort of the way you go about your business has become more efficient? If you could just give us some insights into that as industry experts.
As I mentioned in even during the IPO roadshows and in the past discussions, is that we have seen especially in Oman in particular, we have seen the evolution of technologies over the years. That's why I said even the cost of capex is increasing and the cost of day rate increasing. Part of it is because of the highly automated rigs and the machinery that we are using, the digitalization, and now we're getting more into the sustainability part of it. And this, in return, the customer is seeing a very efficient drilling activity. So it's not just the cost of the asset is increasing, and some of it as well reduces the manpower requirement. So the asset is increasing, the cost of assets increasing, but at the same time the customer is seeing a value. One of it is the HSE exposure is been reduced. The time spent in drilling a well has been slashed dramatically. Some part going up over to 50% of the time that is spent in drilling a well has been achieved over the past 10 years or so, and that is also because of the technologies that have evolved in the country. So there's a big demand of looking at more and more highly technological assets to achieve even better performance in the industry.
Noted. All right. Thank you so much, gentlemen.
Thank you.
Thank you.
I think, do you have any more questions? I think we're running out of time. In that, we will conclude our session. Thank you for your time, and we stay committed at engaging with you, our investors, and ensuring that we maintain a transparent communication, and we are here to answer any of your queries. We look forward to engaging with you in future sessions إن شاء الله. نختتم جلستنا الحوارية اليوم. نشكر لكم حسن استماعكم ومشاركتكم لنا هذا الاجتماع، ونتطلع إلى اللقاء بكم في المناسبات القادمة بإذن الله. والسلام عليكم ورحمة الله وبركاته.
Thank you.